Gold and silver have finally hit their resistance. Now it's pulling back already. See if it's actually exhausted its pullback or is going to fall further. So looking at silver first on the daily, we did have a bearish divergence back here, and we draw this pullback at that point. Although with these divergences, we always make sure that the price starts pulling back. So that, as I always say, it's a bit early. It would have been a bit early to draw that retrace target. So we're going to delete that. Since then, the CCI has risen past its previous high. We're going to invalidate that divergence, even though the price has risen, and so has the CCI. That's gone higher than that point there. Having said that, we've got this pullback. Now you see here, there's a lot of fair value gaps down there, and it's still this one more recently. So that's already actioned. So what we can expect, and let's just do this, is expand that for a moment. So we take back a Fibonacci. Although there's no divergence, we still measure a potential retrace using Fibonacci. You can see there, it's already pulled back at 23-38% range. Currently in that range. Could go a lot further, of course. The CCI on the daily is still dropping, although it's still, both price and CCI are still bullish above the moving averages. So just bear that in mind. No divergence, but that's what pullbacks mean. Fibonacci retraces. And on the hourly chart, we've been going long from that period, from the which is hourly. You would have taken long trades with the moving averages on both the price and the CCI upswing, closing it out when both, especially when the price moving average starts to turn down. Where we are at the moment, you would be out of the trade of long trades, and price and moving averages on the CCI have both dropped off. Also, another way of looking at the hourly, look at Fibonacci level. So there is and here you'll notice there's a divergence. Got this very long-term one. Well, that's the those highs on those lower, and that one back there on the price. So that's a bearish divergence, a very long-term hourly divergence. We take it back to the significant low. So here we can take it back initially down to that level, price there, but you can see it's broken down. There, it's broken down at the level. But even if we expand that, drag that level, you can see there it's already hit the 38% level. And it depends where you want to draw it, but basically, no matter where you draw it, even at that significant low, actually just past that midpoint between 3 and the 38% range. So that long-term divergence there has actually already happened. And you'll notice here on the hourly, CCI and the price are moving upwards towards the moving averages, which is some consolation, although don't go long until we see those both break above the moving averages. So here we've got gold on the daily first off. Now the price come and touch that moving average range and bouncing that moving average range. Also notice we've got a bearish divergence, lower highs on the CCI versus higher highs in the price. We did have this previous resistance level at 43.80. We're going to move that up there at 45.50, and it's actually pulled back from there. And if we drew a Fibonacci on this one, we have to realign this retrace target, that bearish divergence. See there that 23-38% risen to that level slightly. That's our new minimum retrace level. It looks like it's on its way. The CCI is still dropping on the daily. Price has paused there for the moment on that moving average range, likely further downside. So at the moment, the hourly chart, for a moment, did have this bearish divergence back here on our previous resistance, and we've risen that resistance. Notice as well, that goes to a new high there on the side versus price high where that resistance hit. That's pulled back. Now in this case, if we drew a Fibonacci retrace, you can just by eyeballing it down to that level, run way past the 6%, almost. Even if we take it back to one of these previous lows, it's bouncing off that. That's a key area for Fibonacci's. So we might see a bit of a bounce here. Again, going daily for a moment. Currently, the CCI is in a bearish mode, even though the price is bullish, still above the moving average. I'd like to see that break above CCI on the bullish, in which case wait for also the price as well through those moving averages and the CCI to start taking long trades. At the moment, stand clear. Don't take any trades on either the daily or the hourly. Here's some share trading ideas. These are some of the trades we've taken so far in December. So far we've got 4.82%. Unlikely to add to this at the moment. The market's down, but so far these are all closed trades. 4.82%. To get access to that bullish share scan, consider subscribing to the Patreon page. Links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in our next update.